people target veterans so much is because it is literally printing money when it comes to lending, because they're so easy and so easy to do. It's doing a loan at $500K, $700K, whatever that purchase price is, and we do them, all day, every day.
There's two documents that are significant when you apply for your VA loan. They are the
COE, your certificate of eligibility, and then your DD-214.
Yeah. Are VA loans assumable by anyone?
Yes.
Oh, you knew it.
Yeah.
You knew the answer. Yes, they are.
Yep.
How do you get away with buying a home without a down payment and without paying closing costs?
Okay, so
in life, there's a blueprint for everything. There's no need to start over. Hear from industry leaders, those at the top of their fitness journey, and real estate gurus. They tell you exactly how they did it. All you have to do is listen, learn, and execute. This is The Blueprint with Brad Rice.
All right, everybody. Welcome back to another edition of The Blueprint. And today we are going to be ripping all about VA loans, the loans for veterans, all the nuances, the things people don't know about, they don't talk about, the guidelines, all that. We have a real expert on VA loans with us today. I want to welcome Jeff Wyttenbach, and he's a mortgage loan officer who specializes in VA loans, but he also is a Navy chief with 20 years of service. Thank you for your service, my man. Really appreciate that. He enjoys helping first-time homebuyers and bringing military-honed attention and education, and that is very true, to every client. He's based in Ventura, California, so not far from us here. He had a little bit of a drive down, where he teaches VA loan and military relocation courses to real estate agents to help them better serve our veteran clients, right? Jeff's been featured on CNN, which was really cool. I saw that, and KVTA radio. And he debunks myths about VA loans and highlights their benefits, which we're going to get into a ton of those today. So welcome to the show, man.
Appreciate it.
Yeah. Very cool. So I saw that CNN interview, and it was short, but it was super impactful. And it was interesting because you and I got together not that long ago, and we had lunch, and we walked out the parking lot, and you showed me a wrap on your trunk, right? Or it was, I guess, on the bed of your truck. And you said, man, this gets me so many calls and so many. And then I saw online that you get calls from that. Yeah. People just see. So you want to talk about marketing. If you're a loan officer, why not tell as many people as you can? And when we had lunch together, you're wearing a shirt that says, I love mortgages. Like I say this all the time to people, or if you work at a coffee shop and you got your laptop or whatever open, it should say something about mortgage on it. People will just ask you, right?
Ask me about real estate or something, whatever your tagline is.
Right. And then for you, it's like very VA specific. Yeah. So when we talk about VA loans, we're talking about loans that veterans earn, and it's a benefit.
Yep.
And I'll tell you this, that my dad was a veteran. He served in the forces during the Korean War. He was on Okinawa. He was part of the Air Force. And he never used his VA home benefit.
No.
Can you believe that? All those years, and he never did it. And I didn't really have an occasion to need him to do it when I was doing financing. It was kind of he was pretty established in the home. We didn't need to refinance. And when he bought the new home, he had a very large down payment. It just worked out better for him to have a conventional loan at the time. But yeah, there's so many people out there that don't even know what that benefit means. So let's start there. I want to start with your 20-year service with the Navy. Let's just talk a little bit about what you did, what your role was, and then more interestingly, how you transitioned into the mortgage business from that.
Yeah, for sure. Yeah, so start from the beginning, right? So I call it day one, week one, right? So people in the military will understand that. It's just 18 years old, didn't know what I was going to do in my life. My dad was still in the Navy at the time, so kind of going that direction, military direction. But 18 years old, straight out of high school, graduated June 6-ish, and then bounced to the military August 14th, 2001.
Oh, yeah,
so,
the exact date?
Yeah.
Okay.
No, like anybody in the military knows their enlistment date. They know their ETS date. So this is where that helps out with the VA home loan, right? When I talk to veterans, I know what they're talking about, and I can kind of raise BS pretty fast, right?
Yeah.
Especially when it comes to your DD-214, it's like I only did 2 years. It's like, why?
Yeah.
Oh, I got separated. Well, why did you get separated? And then it's a bad discharge, and then you don't qualify for the VA home loan. So,
Very interesting.
Yeah,
Let's
so-
say that again. So what would cause somebody not to qualify for a VA loan?
yeah, so there's probably over 200 different discharge codes that you get discharged out of, right? Normally it's just a normal general discharge on, honorable conditions, everything fine, but things happen in the military, you get in trouble, right? So we can't just fire you, right? So you get discharged, and your discharge code is on your DD-214. You take that code and look it up, and then you can see what code you got, how you separated from the military, and not all of them are good.
Got it. So if it's not an honorable discharge in
Correct.
some fashion, that may disqualify you from that
May
benefit.
disqualify for you. So,
Got it. And you don't know until
Tell
you
them.
take a look at that. Either they know already, or
Yep.
they give you the ability to pull their DD-214, or they have a copy of it, share it with you, you look at it, and it's like yes or no.
Yep.
Okay.
And then to pull that, and then you go back to pull their COE, their certificate eligibility. It doesn't come up for whatever reason, no big deal. That's where you get the DD-214, and I look up that code, submit that to the VA. I never want to determine that, right? So I always say, like, hey, it's not looking good. You got to, this discharge. I will upload it still and have the VA say no.
Yeah.
Right? So it's not my job to say no, like to kill it, but I know it's going to be.
Gotcha.
Gonna be a no.
That's a really good point. So there's two documents that are significant when you apply for your VA loan. They are the
COE, your certificate of eligibility, and then your DD-214.
Yeah, and those will help determine not only your eligibility, but there's some other benefits that you might get if there's something else that shows on there, like disabilities, right?
Disability, correct. So on your COE, most of the time it'll be on there, but on your DD-214, or if you have any other documentation for your disability, is a big deal for the funding fee. So the funding fee, keeps this whole gravy train moving about the VA home loan. So we don't call it mortgage insurance. It's called the funding fee. So that's an upfront fee that gets tacked on your loan. That gets waived with a disability rating. 10% or more.
Okay, I was going to ask you that. What is a VA funding fee? But you just explained it. So
One of my pet peeves, right, with other lenders, it really, really bothers me, and I will call you, right? I will call the lender, is when it's not a flex, right? So when other lender says, oh, we'll waive that for you, no, it's not a flex, it's the law,
Yeah.
right? And then they'll get hit on their QM, on the back end if they don't disclose that properly.
that's interesting.
So they will,
So you're talking okay. So they're out there marketing. Companies are marketing that, hey, we can get your VA funding fee waived.
Yeah.
When the reality is that's just part of the process.
part of the process.
And they're
It's-
marketing it that
yeah,
way.
yeah.
Okay. All right. So So if you've got a disability, 10% or more, you can get either a reduced or have no funding fee.
So there's no reduce. It's just no funding fee. It's
Okay.
either you have it or you don't.
That's it.
Yeah, that's
10%
it.
or more,
10% or more.
it gets waived. And that's on both a purchase and a refinance?
Correct.
Okay.
So there's different percentages when it comes to the funding fee on purchases and refinance and second use. I'm going to mess up the word, subjectical
Second use is fine for our purposes.
So second use. So and then it's basically more than one use, right? That's all they're trying to say. So it's 3.3% for second use, 2.15 for first use, and then IRRRLs are 0.5.
All right, let's talk about what's an IRRRL.
Yeah. So IRRRL, interest rate reduction loan, the greatest thing in lending, I think. It really should be against the law for loan officers to do them, right? Because they're so easy, and we make just as much money on them. So this is why people target veterans so much, is because it is literally printing money when it comes to lending, because they're so easy and so easy to do. It's doing a loan at $500K, $700K, whatever that purchase price is, and we do them all day every day. But
So tell me about this. So we call them IRRRL. They're they're IRRRL, right? Interest rate reduction refinance loan.
Yep.
Okay. IRRRL.
IRRRL.
Okay.
Yep.
It's not like your Uncle Earl.
Yep.
That you visit at Christmas. This is IRRRL with an I. So an IRRRL has some real great benefits to it. What are those?
benefits, there's no benefits.
Like qualifying benefits.
Qualifying benefit, you don't need to qualify. I wouldn't say qualify for the loan. So a regular rate in term, it's a full doc loan. So you're submitting income, assets, checking, credit. With the IRRRL, I need 4 pieces of information. So I can do a soft pull, soft pull score, so I don't even need to do hard credit. I need your mortgage statement. I need your insurance. And then make sure you hit the 210 days and 6 on-time payments. And then it's called the net tangible benefit. This is a good thing, right? So net tangible benefit to protect the veteran, it needs to come down to 0.5%, right? And then it's called the recoupment. So you have to recoup the cost of the refi within 3 years.
Yeah.
So
okay. That's really good. So to really clarify this for people, when you're doing a conventional refinance, in a conventional loan, you're not a veteran, you've got to qualify for that loan.
Correct.
So you may have qualified for the loan when you bought the house or when you did your last loan, but it doesn't matter.
Yep.
That doesn't carry forward. You don't qualify automatically. You could have lost your job, make less money, have bad credit, and don't qualify for a refinance. But one of the benefits of being a veteran borrower and using your VA benefits is it's an automatic refi, no matter what your credit is, no matter, can you have a notice of default?
No. So notice of no.
So you can't be in default on your
Yeah.
loan. If I remember correctly, you also can't be more than 30 days late in the last 6 months or something?
when it comes to the mortgage.
On the mortgage only.
Mortgage only. Yeah.
But other than that, the credit
Other-
doesn't matter.
Doesn't matter.
And and you don't have to supply income documentation, so you don't have to qualify from that point of view. You don't have to supply assets, so that's not a qualifying factor. What it is protection for you. You have to recuperate the cost of the refinance within 36 months or less, right?
Correct.
And you can't have had the previous loan initiated 210 days or 6 payments before the current loan.
Correct.
Right? Okay. It's a very simple process, though.
Yeah.
Less than 30 days.
These are all good things to protect the veteran, right? To trying to refi you just to refi you. Because I know, like, you can come down in a regular conventional, come down an eighth of a point and do it, right? But it may not make sense.
Right.
On the math side. But it's like, hey, I refied, and then people get...
You can't get taken advantage
Yeah,
of.
you can't. So
Yeah, this system won't allow you,
Yep.
which is fantastic. So again, really taking care of our veterans.
Yep.
Right? You get this. So let's talk about the purchase benefits. What are the purchase benefits for a veteran?
My advice for someone selling their home: number 1, do it yourself and save. Number 2, use HomePie.
HomePie makes it easy to buy or sell without an agent. I can list a home in minutes and start receiving offers right away from buyers.
When we discovered that we didn't have to lose $40,000 in agent commission just to upsize to a larger home, it was an obvious choice.
List your home for free at homepie.com. Keep your piece of the pie.
So no down payment, right? That's the huge one. Getting in the home as free as possible, right? So there's plenty of times you can literally move into your house for pennies on the dollar, right? I think that's the number one benefit of using your VA loan.
Yep. So no down payment required.
No down payment. What else?
What about, is there a loan limit to VA loans?
No. So no loan limit. So I've done plenty of 1.3, 1.4 million. Still got to qualify. So, still have to qualify for the loan. Another good benefit, DTI restriction. So there's no DTI requirement. So it goes off residual income and DU findings. So
Explain what that means. So they don't require a DTI percentage, which is
Correct.
debt to income ratio. So if you've got income, there's a certain percentage of your income that can be applied toward your mortgage and all your other expenses. That's a standard underwriting guideline. But on VA, it's different.
It's different. So regular conventional is hard stop at 50%. No matter what bank or lender you're going to go to, it's going to be at 50%. Right. So money basically coming down. I just use 5th grade math all the time. So, 10 grand a month, right? You're taking out automatically, half of that, you're only qualifying 5,000 a month. Right. And then you take your PITI, your principal, interest, title, insurance, whatever that payment is. Right. And then you take all your other debt. So I'm talking debt on your credit report. So your car payment, credit card debt, student loans. What am I missing?
Everything.
Yeah,
if you've got, if you have separation,
child
payments,
support,
all
child
that.
support, alimony. So what we don't care about is cell phone bills, water bills, any of that
Right.
stuff. So
anything
debt.
that reports a credit.
Correct. So take that and 5,000, add that up, and then that's what you qualify for. On the VA home loan, that doesn't matter so much, right? So you can go up to I can get 60, 65% DTI all day, every day.
But there's another factor.
So it's called residual income at the very end. So the amount of money you have left over is what we care about on the VA home loan.
Yeah.
So your residual, it goes off of what part of the country you live in and then how many dependents you have.
Yeah.
So I would say family of 4 in SoCal, you need about 1,200, about 1,400. Because the guidelines, you have to go up 120% if you're over, getting really geeky. But if you're over 41% DTI, which you will be, it has to be 120% of the residual income. So it's about $1,400 a month that you need extra after you pay all your bills.
So this is like for your protection, so that you're getting into a property that you can really afford.
Correct.
Because we all know you get into this home, and you have expenses that were unforeseen. You got things you got to do to the home. You may have done a walkthrough to the house, and it's like beautiful. It's great. It's, oh my gosh, it's so light and bright. You buy the house, you move in, and you're like, oh my gosh, it was light and bright because there's no window coverings.
Yeah.
You didn't realize that, and you got to go buy. So life has its expenses, and your dependents are part of those expenses. You got school, you got books, you got backpacks, and all those things. And so it says basically, we want to make sure that you got enough money left over after all these new housing payments to still be able to live and afford your life, right?
Absolutely.
Okay, cool. What are the top 5 benefits of VA loans?
I'd say if you're considering joining the AmeriFund team, it's a really good idea.
We as processors at AmeriFund Home Loans support the loan officers in every aspect of the loan once it comes into processing because we want them out there marketing themselves and originating more loans and supporting more borrowers.
Competitive commission plans are a given, and powerful technology is expected, but what truly sets us apart is our culture. We've built a solid support system for our loan officers.
If you're interested in joining the AmeriFund team, go to amerifund.com/careers.
So DTI, no income restriction, DTI, credit score. So there's no credit requirement. That's a big one. What else? Those are the top, I would say, top 3.
And no down payment?
Yeah, no down payment. So no down payment, no DTI, no credit score. That's a big one. Your credit scores. I tell people it's not your credit score. It's what's on your credit.
Yep. And no mortgage insurance.
And no mortgage insurance is a big one. But funding fee. So if you have,
But it's not monthly. It's a one-time fee, and it's
one-time
financed.
fee. It's financing. So I think we hit them all. But,
so let's go back because maybe there's 4 that are really the top. So the 4 best VA benefits of getting a VA loan are
no down payment, no credit score, no DTI, and then no limit on purchase power, and then no
loan limit, and then no mortgage insurance payments. So there are 5.
Yep. There you
go. Okay, the 5 top VA benefits are
no mortgage insurance, no credit limit, no DTI, and then no qualification, no limit on how much you can purchase. Did I say that? Yeah.
Yeah. What are we missing, Micah? Hang on, I gotta write this down because we did it like 3 times.
Yeah.
So no down payment, no down. We've got no MI, so no monthly mortgage MI. We've got no credit requirements. We've got no loan limit, right?
Yep.
And then there was one more.
Yeah.
What did we do, Jeff?
DTI,
We're both losing
was there
it.
DTI on there?
And no DTI.
Yeah, DTI
there you are.
Yep.
Okay, so we got it.
Yeah.
So here we go.
Yeah.
Back again.
Yeah.
The top 5 benefits of VA loans are no down payment.
Yep. No credit score, no DTI limit,
no MI, and no loan limit.
No loan limit.
Yeah. So there's a lot. I mean, that is a big deal.
No, for sure.
So we're talking about no's right now, like no this, no that, right? You ever heard the term VA no-no?
I've not. No docs. What is it? No docs, maybe?
No income, no down payment.
Yeah.
Yeah. So actually, that's not correct. Let me back up. We used to call VA no-no no closing costs and no down payment. That's a VA no-no. So how do you get away with buying a home without a down payment and without paying closing costs?
Okay, so no matter what, somebody is paying closing costs, right? This is one of my pet peeves, right? Especially talking to the veterans, they bought a house 10 years ago and they're right? So they tell me all the time, I didn't pay closing costs. I'm like, somebody paid closing costs. So who paid it, right? So let's get over who paid it. You either took a lender credit, right?
Yep.
So lender credit. So you took, let's say par rates right now, is low sixes, right? 6.25 for par is pretty average right now for VA. Say you take a 6.75 or 7, and you got a lender credit of 8 or 10K.
Yep.
Right. So that will cover some of your, if not all your closing costs. So closing costs in California, I always estimate 2 to 2.5%. Right. So 5th grade math, 500K is going to cost about 10 grand to close a loan.
Mm-hmm.
So you can take the lender credit, see if you have enough there, if that makes sense, right? Or you can take seller concessions as well too. Have the seller help out with closing costs.
But you can literally get into a home without a dollar out of your pocket.
Correct.
Okay. Because I've seen transactions where a veteran makes an offer and they put in their earnest deposit, right? 3% or whatever. That's a good faith money saying, hey, seller, I'm serious about this. And they structure it where there's either a combination of a lender credit or a seller credit. And then at the close of the escrow,
they get all that back.
They get their earnest money deposit back.
Absolutely.
And they get in without a dime. Is there any other loan in the country that could do that sort of thing?
Absolutely not.
No. All right. What do you think the biggest myth about VA loans is that you want people to know?
God, I think all the 5 facts are all the myths about the VA loans, like what the benefit is. So I don't think there's one. I go in spurts of I get a lot of no limit stuff. So it's oh, you need, they always get messed up with FHA. You can't go more than county loan limit, or this is I don't know why. So I get that a lot.
Yeah.
So I just closed last month a $1.1 million deal. The lender was saying they needed a $150,000 down payment. The broker called me. Their lender called me, said, this is asinine. You can't do that. And I'm like, I promise you I can't. Actually, here's your 1 point. I gave him a 1.1 mil pre-approval. I was like, no, actually, here's 1.3. This is what you can go up to.
Okay.
And then that, that was awesome. DTI requirements, right, is another one too. A lot of hard stops. So let me back up too. A lot of lender guidelines and VA guidelines.
Yeah.
So that's a big myth.
Let's talk
too.
about that because I think that is kind of a myth that people will hear something and what they don't realize is that lenders have what they call overlays, which is hey, the VA may accept this, but we're not comfortable with it, so we're not going to fund loans that don't have, in excess of a 55 DTI or whatever. So a borrower may hear this or a real estate agent, they think that that's gospel, right? And it's a myth. Because pure VA guidelines are exactly what you said. There's no DTI limit. They'll do a loan that makes sense, right? That meets the other requirements. And so that's definitely one of those myths. And if you're listening to people that are telling you that there's a limit to what can be done, but the VA will do it, it just means that their company has this overlay. Correct. They're not comfortable with it. Yeah.
Yeah, I get that all the time. So
that makes sense.
Yeah, the agent just hit saying, waiting there. I was asking about the loan, how one of the loans, we're waiting for the rapid rescore to come in. And then I was like, why? He was like, well, he's at a, 617 credit score. He needs to be at 620. I was like, well, technically he doesn't, right? So ask your lender if, if that's a lender overlay and then find out, it is. So
is there a better rate for higher credit scores?
No, absolutely. So, so you're being, I tell people you're being judged.
Yeah.
Right. So you're being judged on paper, right? So assets, income, credit score, right? If you have a 780 credit score, right, with 200 grand in the bank and, been at your job 10 year and W-2 employee, you're, going to be at top tier pricing. This, the LLPAs, the loan level pricing adjustments for every lender has them. You're not going to get hit with any LLPAs. So you're going to get, the best
pricing
for that lender.
Yeah, that makes sense. So, if you're a borrower and you fall in love with a home, or if you're a home buyer and you fall in love with a home and you really want to buy it right now, but say your score is lower and you get a higher interest rate, what would you advise somebody like that? They already fell in love with this home, they want to buy it, but they're going to wind up with a higher interest rate.
If you can afford it and you're so qualified, buy the house.
Because
you can IRRRL in 6 months later.
Bingo.
So I tell all the time, it's take the lender credit, take all the closing costs, move into your house for free. I'll IRRRL you 6 months later, and you'll be down to. I was just locked. I'm closing 3 loans this week. I have 2 of them at 5.5.
Yeah.
Right now, and they're at 6.25, 6.5.
So wait, that is an interesting strategy. I'd like you to kind of tap into a little more, because I think that if you're a veteran listening to this, you got to hear this strategy, right? Because this is a real money saver. So you recommend that they buy the house, get as much credit as possible, even through a higher interest rate, get into the house with as little bit of cash as possible, because you're going to recuperate that and lower their interest rate. And even if interest rates don't move, right? Even if they don't improve, you'll be able to get them a lower interest rate with low closing costs on an IRRRL versus getting that credit for the higher interest rate today, right?
Absolutely.
Yeah. And the reality is that we're probably, as we have been for the last few months, in an interest lowering environment, so you'll be able to get even a bigger benefit.
There you go.
Yeah, I love it. That's a great strategy.
Yeah. Always take advantage of builders too. So builders, have
their
all
credits?
the upgrades. Yeah. Get all your credits, get all your upgrades, get granite countertops and the top of line cabinets. I was like, I'll refi you the next day. Close on your house.
Got it. That makes sense. All right. Here's a question I get a lot. I'm a veteran. I want to buy a house with my buddy who's not a veteran. Can you do that?
Absolutely.
How does that work?
So it's just a joint loan, right? So a veteran and non-veteran can purchase a house. This is where lender guidelines come in. Not all lenders can do it. I'm literally in escrow right now in what are they buying? In Wittenbach or Oxnard, 2 veterans that didn't get married. They didn't want to get married for whatever, and it's just how you structure a loan and whose entitlement you want to use. But yeah.
So that's 2 veterans.
2 veterans.
So a veteran and a non-veteran can also buy.
Correct. So that's another lender overlay as well too, right? Not they're all same. So veteran and non. This is where I don't recommend the VA loan a lot of the times, right?
Okay.
It just comes down to math to see if it makes sense. So veteran, non-veteran want to buy a house, right? A lot of boyfriend, girlfriend stuff, right?
Yep.
So it's like, hey, we're not married yet. We still want to buy. The non-veteran has come in with roughly 12.5% down, right? So the 12.5%, the non-veteran has come in. So why?
Is that calculated on the full purchase price or half of it?
The full, you know what? That's a good question. I want to.
I think it's 50%
of that. That's a good question. Yeah,
Okay.
I'm assuming it's the whole purchase price because it's the whole.
Micah, would you look that up for us just so we can get the correct information here? Do a search that says if a veteran buys a house. I mean, you might even do chat on this. That'd probably be a better method if you go into ChatGPT. But something about if a veteran uses his benefits to buy a house using VA benefits to buy a house with somebody who's not a veteran.
I think it's got to be the full because they're backing that full. The VA where the VA comes in is they're backing the purchase price of whatever the entitlement is.
It might be calculated on the full amount. I don't even know the answer to that question, so I was asking it, and it's you probably don't come across this very much, but I think it's good information that people could use because you likely do get people that are not married yet, and I think the significance of that is if you're a veteran and you're married, you and your spouse qualify for your benefits.
Correct.
Okay. Does a spouse whose husband passes away qualify for those benefits?
Correct. So that's another thing too. Is it just what the death certificate says and if it was service connected. So there's a little checkbox on the COE when you pull the COE. So Social Security, date of birth, right? And then there's a little checkbox that says surviving spouse. Mm-hmm. So you click that checkbox and then get their DD-214 and get their death certificate and see if they do it. But
I'll tell you what, Jeff, I would bet you that most veteran spouses who are widowed don't know that.
No, for sure. I've done it for a lady in Port Hueneme. She was in Hueneme Bay there, right? Her husband was a retired chief, passed away, and then pulled his COE. She was gonna sell that house, and then seeing how much entitlement they had left, and then pulled the COE, and she had full entitlement.
Wow.
From, the husband
I would bet you that because you really do specialize in VA loans, that when you're working with somebody, you ask if the spouse has
for sure.
a COE for the. What if they get remarried?
So and then bets are off.
That's it.
Yep, that's
all
it.
bets are off.
All bets are. Or divorce. And so, hey, tell me how I know because
you experienced this already.
So shame on me, right? Is I was dealing with just thinking proactive, dealing with a nice lady, and then got everything, and then realized I was like, the COE just wasn't coming up. She was like, oh no, he died of this. And then it was like, well, it's my ex-husband. And I'm like, God, I was like, that's 4 hours of my life I'll never get back. You know, it's just like,
That's different.
You know, I was like, yeah.
Ex-husband,
I was like, yeah.
Qualify. All right, if a veteran uses his VA loan benefits to buy a home with someone that does not have VA benefits, how much does the other person have to come in with for a down payment?
So I'm assuming it makes sense for the whole, because where the 12.5% comes down is half is the VA,
the 75,
the 75%, right? So it's
Okay.
backed by
You're
25%,
probably right.
and then your 12.5 comes from the non-veteran.
I'm happy that you're right and I'm wrong.
Yeah, so
All
that
right,
just
let's
makes
see.
sense for that, but I've never done one. So
portion loan amount exceeds is not using their full entitlement. That's not really
what we want.
answering that. Say, oh, scroll down. Yeah. Say, is the 12.5% down payment from the non-veteran based on the full purchase price or half the purchase price from the non-veteran?
So this is where sometimes it just doesn't make sense to do it, right? So if you're buying a house at $500,000, right, 12.5% down, maybe a regular conventional at 5 is,
might be less.
Will be less, and then
Yep.
So it just comes down.
Your
to
loan
math
officer
and,
should be doing an analysis
for sure, and saying
comparing
like, hey,
for you.
this doesn't make sense to do it.
And then save your entitlement for your. So
Yeah.
let's talk about subsequent entitlements, right? Did that 12% from the non-veteran based on the full purchase price or half the purchase price? I want to talk about. What was I going to ask you something?
Yeah, the second use.
Second
using
use.
again.
Yeah, subsequent use, and there's a term for that.
Yeah.
You know. Cover 500. Scroll down. Shortfall. 600 VA loan limit. 12% of 100. Oh no, it's on the shortfall.
12% of 100K.
Yeah.
Example breakdown.
So it's based on the shortfall when you do the calculation. Okay, so it's even different.
Yeah.
Okay, there you go. So lesson here is that if you are a veteran, you want to use your benefits, and you want to use that with a partner that's not your spouse and they're not a veteran, there's a calculation, and that calculation tells you what the shortfall is based on what your coverage is, specific to you, and then the down payment is based on that amount.
Yeah.
Okay. All right. Cool. So the subsequent benefits. So you can you use your VA benefits more than once? Are you a tech investor looking to shape the future of real estate? HomePie is the #1 for sale by owner marketplace, and we are revolutionizing the way homes are bought and sold. I'd love to hear from you. Just email invest@homepie.com and let's chat. Now back to the show. Can you use your VA benefits more than once?
Correct. Absolutely. So,
Okay. And how does that work?
So two things is where people get confused. So if you buy a house, right? You buy a house here in, Port Hueneme, Oxnard, Ventura County area. You buy your house, live in it, and then you get orders to Florida and you sell your house, you're going to have full entitlement. You can do that as many times as your heart desires. Keep selling, buying another one, selling, buying another one. Where it gets tricky is when you want to keep property, right? So if you want to keep, hey, I bought a house in Port Hueneme or, wherever you're stationed at San Diego. Hey, I want to keep this. I want to move to, Virginia and buy there using my VA loan. So it comes off entitlement. Every veteran has $144,000 of entitlement, $36,000, right? And then I literally call it VA monkey math, right? So it's 20, goes off the county loan limit. We need to find out what county you're going off of. Not all counties are created equal. So what's good and bad about Ventura County, LA County? Are we in LA County?
No, we're still in Ventura.
Ventura. Yep. So LA County, Ventura County, Santa Barbara, we all have huge, it's expensive, so the county loan limits are high. So Ventura County's $1,015,500. You can fact check me on that, but yeah.
Okay.
Roughly, right? So this is where VA monkey math, you find the county loan limit, so $1,015,000, divide that by 4, use how much entitlement the veteran used, subtract that, times that by 4.
Huh.
Yeah, and then that will give you the amount with
leftover
entitlement with no down payment.
So that means if you're doing that, you could actually use your VA benefits for more than 2 properties
Correct.
at once, as long as the calculations are there.
Just not in California.
Because of the
But
the
just
numbers.
you're gonna run
That
out of
makes
money,
sense.
right?
Okay.
So a lot of times I've seen a lot in Texas. You start buying $200,000 properties. $195. So
Okay.
absolutely. Florida.
And then
so
can you
there's stuff.
take advantage of IRRRLs on all those? If you own 3 properties, you qualified for those with your entitlements. Could you do IRRRLs on each one?
At the time? I think you can't. I need to look up that because
Okay.
Does that have to be your prior? I need to look up.
I mean, we're getting into the bowels of guidelines.
Guidelines.
I don't want. I'm stumping the monkey.
Yeah. So it's I think you can do IRRRL on a non-occupied. I don't think it has to be your primary. I would fact check that. Yeah.
Okay. All right. Yeah, that would be interesting. Maybe look that up, Micah. Can you do?
So that's the biggest thing with everybody should be doing this, right? It's called shooting from the hip, right? Never want to put out bad information. And then even stuff like you're pulling up now, like ChatGPT, I want to know like where
you would
that's-
want to see the actual guideline.
See the actual guideline.
Yeah.
It's like where you're pulling.
For
you know
sure.
what I mean?
We're
Like,
doing just something quick and easy.
Quick
but,
in Google.
Can you refinance a VA non-owner occupied property?
But yeah, that's I think that's a huge myth too.
So who qualifies for a VA loan? Do you have to be a veteran, or could you be active duty or reserve?
No, absolutely. So active duty. So veteran, anybody who separates, and then active duty guys. 180 day. Any active duty guy now is over. I'm never too worried about them if they're active duty. It's 180 days. So once they get through boot camp, get in the first command, they're going to qualify.
Okay.
So I'm more worried about I call them the old timers, right? Korean War vets, Vietnam vets, World War II vets are kind of dying off. But yeah, just got to look up there. This is where the COE comes in, right? I have a whole sheet that breaks down timelines of what you qualified when you came in, what you qualified for, and it's automatic. But
what about reserve?
Reserves is 6 years.
Okay.
So if they didn't do anything, right? So if they were just plain, I call them plain military, right? Part time. So
yeah.
I don't really see the commercial anymore, but 2 weeks a year, 1 week in a month.
Yeah.
You know what I mean? Call them part timers.
That's right. They used to run those commercials.
They used to run them all the time, right? Yeah. So, go off to commercial. If you just did that you have to do your full 6 years.
Got it.
So if you just did that.
Okay. Well, that's good information.
Yeah.
A
lot of times, with the reservists, they get activated a lot too, right? So if you're a reservist in 2005, 2008 timeframe, and we got 2 wars going up, the odds are you deployed and did something, you're going to qualify. You're going to qualify.
That's cool. All right. So we're looking at this VA non-owner. So this basically says you cannot, but there are exceptions to refinancing a VA non-owner occupied property, and those exceptions have to do with, for example, active duty. So you're deployed, you get moved, and now you can still use that. So maybe not for your veteran who's not serving anymore, who just makes the decision to move, but those that are forced to move. So that's good to know.
There you go.
Yeah, there you go. So actually, let's stay on that subject because you teach real estate agents about permanent change station and moves, right? And so talk a little bit about that emotional and logistical challenges of PCSs and how they affect how a real estate agent should interact with these folks and the veterans themselves.
Yeah, no, for sure. So the taught the MRP class, Military Relocation for Professionals. So it's a real designation that real estate agents get that they can put on their signature block and business card. So. But yeah.
So yeah, if you're an agent, you're listening to this, and you want that certification, which would be really smart if you live near a base, Jeff can help you with that. So we're going to give his contact information at the end.
Sure. The number one, so people don't know this either. Number one employer in Ventura County is Naval Base Ventura County. Mm-hmm. So kind of plug that in. But where was it going? Yeah, MRP. Just knowing. So the MRP will teach you all about military and military lingo and PCS and the challenges. Coming from overseas, So I'm dealing with a guy in Bahrain right now, right? So I take his Zoom calls, right? It's fun at 10 o'clock at night, right? And 9:30. So it's FaceTime, text messages. So, just the time change,
Yep.
Are you pot committed, to deal with somebody in Yokosuka, Japan,
Yeah.
right? That's coming back, coming here. And, he has 5 days of house hunting and he's going in LEX and he has no idea, where to look or,
Yeah,
where to
you
go.
really
So-
kind of have to understand what they're going through
Yeah.
so that you could help them appropriately, right?
sure.
And so you're teaching real estate agents that.
Yeah.
Because, our veterans, they get, on our active duty, they get relocated.
No, I'll-
And they need help, but they might be working in different time zones. They could be going 2-3 days without sleep,
Yeah.
right? And
For
they
sure.
still need help. So
And then what's good for the agent is it's a automatic referral base, right? So it's these guys we deploy a lot and then we PCS a lot too. So it's not uncommon if you're still in the game, right, to help them buy the house and then 2 or 3 years later help them sell the house.
Yeah.
Right? And then you do a good job and he's got a full 100 guy department, right? That
Yeah.
people, he's calling his relief. I mean, somebody who's relieving him, it's like, hey, you want to buy a house? He's like, oh, I'm thinking about it. Well, my agent's selling this. She did a good job, or he, you know what I mean? So
I imagine that's what's attributed to a lot to your success because you've been doing this for 3 years now.
yes,
And you're a top LO.
Yeah.
And you do mostly VA loans. And so you specialize in that, and guys know it, and they tell
Yeah.
a friend, and they tell 2 friends, and there you go, right? For sure. So there is a challenge, though, when somebody's out house hunting and they're a veteran and they're not working with, say, a really strong real estate agent that understands VA loans. Sellers and listing agents, there's a stigma around that.
yeah, for sure.
How do you overcome that challenge?
I try, I want to say always, because 90% of the time, call the listing agent, right? So call the listing agent and just kind of explain, what I've done, right? So it's a true pre-approval, so it's like, hey, I checked assets, income, credit, I pulled the COE, I did my work, right? I can close this loan in 23 days or 21 days.
Yeah.
This is a slam dunk, kind of give my resume a little bit too, say, hey, this is going to be my 40th VA loan this year. You know what I mean? I've worked with this and this. This is no problem.
Why do you think that these, real estate agents and therefore sellers have this myth that they think it's a more difficult loan?
I don't know. I think just over time, I call them cube captains. The real, one bad news spreads faster than good news,
Yeah.
right? So nobody's gonna post, I closed a VA loan in 21 days, but me, right?
Yeah.
So, the real estate agent is like, I had a great experience. They're not posting that; they just remember the bad.
Yep.
So, you get a lender overlay that stops it. You have termite; they don't know how to navigate termite damage. The appraisal issue as well too. If there's an appraisal,
Let's stop at
how-
the termite
yeah.
damage because that is a unique process in VA loans. On conventional loans, there's no requirement for a termite report.
Absolutely.
And this is primarily in California, though. There are states that's not as much of a deal as I understand it. I could be wrong.
Correct. So it's just all the southern. If you just took the United States and just kind of drew a line down the middle, I would say down require a termite, and then
Yeah.
anything up.
Okay, there you go. So it is a requirement. So maybe an agent had a situation where they thought they'd get away without this issue with termites that they kind of maybe knew about,
Yep.
but figured a conventional loan, they haven't had, it's not a requirement. The lender doesn't ask for it, but on a VA loan, they do.
Correct. And then not to stump agents or their lack of knowledge, right? But a standard real estate agent doesn't know what they're doing. Right, so I hate to say it, right? The math doesn't lie. So we just saw the math a month ago. 75% of agents didn't complete a transaction in 24.
That's right.
So 3. So if you're just talking to a random agent, right, they don't know what they're doing.
Yeah.
Right. So I'm sorry. Right?
Nope,
I'm
in
going to rub
agreement.
I'm going
Jeff,
to rub people the wrong way. Right.
I'm
so,
in agreement with you.
and
And
then-
I think the good agents would say that too.
Yeah,
like
for
they
sure.
get frustrated by an agent that does a transaction every year and a half and they
Yeah.
don't know what they're doing.
Correct.
And they're having to pick up, both sides of it to help
Absolutely.
the transaction go forward.
So
yeah.
that doesn't help either, right? So
Yep.
when agent that doesn't know what they're doing gets from another agent that says, "Hey, I had a bad experience," and there's like,
There you
VA.
go.
But yeah,
Yeah, I think part of it might also be they consider all government loans to be similar to FHA.
Yeah.
And in FHA loans, the inspection is really important. What it says in the appraisal, and if it calls out anything that's health and safety related. So this could be chipping paint.
Yep.
It could be part of a concrete steps going to the house that are uneven.
Yeah.
It could be a handrail that's missing one of the bars. Like those are the types of things that need to be repaired before you can close that loan, and maybe they equate VA loans to
VA
being
loans,
similar as FHA.
But to answer your question about termite, right?
Yeah.
So just know how to navigate the termite inspection and who can pay for it. That's a big one too, right? So, so anybody can pay for the termite.
Okay.
So the seller or the veteran can pay for it. So that changed probably, I think it's about 2 years now.
Okay.
Right.
It didn't used to be. That was one of the non-allowables.
That was correct.
Right.
So,
where VA, it used to be, there were more than just that. There was a list of closing costs that the veteran was not allowed to pay. The seller had to pay for it.
Correct.
Right.
Yeah.
So now termite's no longer on there.
Termite's no longer on there.
Okay.
So what I do, right, what the agents I work for, right, I tell them to put it in the contract, right? So seller will provide a Section 1 clearance, right?
Yeah.
Knowing that most real estate agents don't know what they're doing, right? And they're just going to say yes.
Yeah.
Right. So,
that's a good point.
And if you get countered back, you get countered back.
Yeah.
But most of them are, I would say 75% of them, they're like, oh, it's VA. Yeah, we have to. It's like, okay.
Having that conversation up front between the real estate agent and the loan officer is critical, especially when it comes to VA loans.
And I never lie to them. So if the listing agent calls and says, "Hey, what about termite? How do we need?" I was like, "It's a negotiable thing, like anything else."
Of course.
So you can have the veteran. It's negotiable, whatever it is.
Yep.
Right. So
are there any non-allowable fees anymore?
Yes. So there's a whole list of it. I really don't. It's more with borrow paid issues with the 1% rule, and you need to offset with lender credit. So. There's like title. I need to go. There's a whole thing.
There's still a list of
those.
There's
still a list. It's not a lot. It's probably like $2,500 worth of stuff. You can't pay for it. A lot of times with if you're charging a huge origination fee, they would have to hit that. This is where like lender guidelines come into play.
Okay.
So I really don't do borrow paid that much. I try to do lender pay as much as possible. But
and just for people that don't know what that means, so when we talk about lender paid, you're taking a little bit higher interest rate in exchange for the lender covering costs of closing. If you do what's called borrower paid, then you can get a lower interest rate, but there might be additional costs you have to cover. Okay.
And then it just comes down to math to see
what
what's
makes sense.
Better. Yeah, what makes sense.
You want to compare them.
Yep.
All right, here's a big one, and I had to look this up today because I was like, I'm not really sure. Are VA loans assumable by anyone?
Yes.
Oh, you knew it.
Yeah.
You knew the answer. Yeah. Yes, they are.
Yep.
That is probably the biggest myth out there, right?
100%.
That they're not. And so if I'm a buyer and I'm not a veteran, so I don't have eligibility, but I'm buying a home from somebody who did buy it and has a VA loan on there and has a very low interest rate, I can assume that loan.
Absolutely.
Do you know what the guidelines are to do that?
Pros and cons to this,
Okay.
right? So pros is you have somebody that buys your house, right? If you're having a hard time selling it, right? Cons is that entitlement for a non-veteran, that entitlement stays
gets locked up.
Gets locked up. So some people care, some people don't, right? So I had a couple that called me. They were both military, so they had 2 entitlements. So they didn't care. They got a higher offer. They got like $15,000 over asking, right? So they're like, hey, we're getting over asking. We're keeping that entitlement with the house. We have my entitlement. We're moving back. The East Coast. We're going to use mine to buy the house. I was like, yeah, sounds like a good deal.
Wow.
So
okay.
it's like,
that's a perfect scenario for
yeah.
that.
Sometimes, there's only one entitlement, so it's tied up in the house. Maybe you're taking that down payment, so you're making that chunk of money, so you don't need to use a VA loan again. So I always say,
or maybe it's a family member that's buying the house.
No,
and you
absolutely.
want to give them the benefit of the 2.5% interest rate
absolutely.
you have.
So it's a kind of workaround for using the VA home loan, right?
Yeah.
Without using it. I never thought of that with the family member.
Yeah.
To just assume the loan. So assumptions, right?
Yep.
Love these. So I've never done an assumption loan.
Yeah, because it typically doesn't involve the loan officer. There's
Yeah.
no commission on it or anything.
Correct.
You have to navigate that process
People
through
don't
the
realize
VA.
that.
Yeah.
People are just like, well, why don't you do them? I'm like, because you're dealing with the servicer.
Yeah.
You're assuming that loan. So
That's
like,
right.
I'm out. Like, I don't do the loan.
You have to do it
because-
directly with them.
So pros and cons with that, right? Is you're dealing with the servicer and their guidelines.
Yeah.
And tell you right now, they just make shit up, right? So,
That's so true.
right? So, I don't know if we're allowed to swear on this, but
Yep.
yeah,
You already did, so it
yeah,
doesn't matter.
yeah, but, so you're dealing with their guidelines, right?
Yeah.
So two different sides. With the assumption, their goal is for them not to assume the loan.
Yeah.
That's the servicer. They won't tell you this,
Yeah.
but they want you not to assume the loan. They lose 40 hours of manpower for every assumption.
Yeah. So the big thing you can do if you're a buyer that's looking to acquire a property and the loan on it is a VA loan, and the seller agrees to let you assume that, is get that seller to provide you with a copy of their note.
Yep.
And in that note, it'll state what the assumability of that loan is and what the requirements are.
Mm-hmm.
And the servicer has to follow that. They own that.
Yep.
But they can't tell you can't follow that. So you have to be informed.
Yeah,
right.
for sure.
All right, I got kind of one last one for
Yeah.
you, and then I want to cover whatever you want to. So, are there any changes to the VA guidelines in 2025 that we should be aware of?
What 25 this year?
Yeah. And I don't know if there are or aren't. I'm just curious.
No, I think no, not off the top of my head. Not any like big, because circulars. I don't know the last circular that came out.
Yeah, because they
Yeah.
send the announcements on any changes.
on the
Yeah.
VA website. I used to call for Navy guys, military, call them nav admins. So it's like how the Navy communicates with
Yeah,
you,
gotcha.
right? They'll put out a message that says, "Hey, change to whatever policy," right? So that's
So nothing new for 25.
nothing. Yeah, nothing. Yeah.
Okay. What else do you
trying
want
to
to cover
think,
for
yeah.
people that they should be aware of?
Yeah, I just a lot of just random fact, and like we talked about, like VA loan has the lowest default rate out of every loan. So a lot of times you're like, oh, you're doing these bad loans at 73% DTI. It's like, well, no, I'm not, because you know what I mean? There's a lot of factors that come in a loan that you may not see.
How about
right?
responsibility?
Yeah, responsibility.
Right?
Yeah.
Would they learn about responsibility while serving? I mean, I know companies that will only hire veterans because of the discipline, because of their responsibility, their loyalty, all those things, the things that they learn while they're serving.
Oh, yeah.
So that's not a surprise.
For sure.
What other stats?
80. We talked about who hasn't used a VA loan. So it's like 80. You can fact check me on this too. 83% of veterans have not used a VA home loan.
Wow, that's
Yeah.
staggering.
So it's pretty.
It's an
high
education
percentage,
thing.
Yeah.
People
So-
need to be aware of it.
That's where the real estate agents and lenders come in.
Yeah.
I know the back broker action coalition was big a couple years ago. It just got put on the 1003. Are you a veteran?
Yeah.
So what was that? Only like 3 or 4 years
Yeah,
now. So
that's it.
So 4 years ago, now there's a check mark that says, "Are you a veteran?" Right, and it's yes. So
Yeah.
it helps out. So
What's
that
interesting about
conversation.
that, Jeff, is that when I originated loans, I used what I call my loan prospect sheet. I shared this with the team the other day. And the loan prospect sheet was, I always felt it easier to write things down when I'm talking to somebody instead of trying to type in a computer or whatever. So I went through a series of questions and I write everything down. That way I've got all the information there and I can analyze it and go back and look at it. And, oh, they said this, or oh yeah, they have a third job they get income from. All those things are in there. But one of the first questions is, are you a veteran?
Yeah.
Because if you don't ask, they don't offer you, they don't tell you up front. And you could be deep into the pre-approval process and be looking at conventional loans and other things.
Yeah.
And then you find out later they're a veteran.
Yeah.
Why didn't I just do that?
Yeah.
You got to ask that question up front.
For sure.
Yeah.
A lot of stat and a lot of random. So we made fun of real estate agents. I'm make fun of lenders too, right?
Okay.
Is we're no different, Is the average loan officer only does 1 or 2 VA loans a year.
Yeah.
So it's law averages, right? So you have a real estate agent that hasn't done a transaction. You have a loan officer that hasn't done a VA loan, and they meet at an open house on a weekend, and a veteran comes in and says, "Hey, I want to use my VA loan," right? And then they wonder why they fail.
So a lesson for that is, if you're a veteran, you want to use your eligibility, you should ask the question to your loan officer: how many VA loans did you do over the last year?
No, love it.
Right?
Yeah.
Because look, you're a top producer. You've closed a lot in a very short period of time. You jumped in and you took your discipline and you learned mortgages and you concentrated on VA. Now you teach this to others, and you're an expert. And so the things that you didn't know today that we looked up, those are really nooks and crannies. Like
Yeah,
you don't
very
come across
select,
that often, and you would just do the research on it. But the broad strokes and knowing how to qualify somebody and what the envelope you can push, that only comes from doing these loans. Like I say the same thing about reverse mortgages. If you're working with somebody and you're thinking about a reverse mortgage, you need to find out if that's what they specialize in. Because if they don't, they're not going to give you the best loan. Yeah. They're just not. They just don't have the experience. Absolutely. And so that is a really good question to ask up front. And of course, Jeff is one of those experts. So what other stats? Anything?
Nothing
come to mind?
Come to mind. That's the biggest thing.
All right, man. Well, look, you dropped a lot of knowledge today. And if our listeners want to get a hold of you, they want to reach out to you, they want to get pre-approved, how do they get a hold of you?
You can Google me. Just Google me, come up. I will come up as loan officer. VA Loans All Day is the Instagram handle. Jeff Wyttenbach, if you just look up me on Facebook.
All right, we're going to have to spell that for everybody. So it's
Wyttenbach. I always make fun of my name.
Wyttenbach. Okay. So, but what was the handle on Instagram?
VA Loans All Day.
VA Loans All Day. Yep. All right. Awesome. How about you want to share a phone number?
805-512-0897.
Awesome, man. Yeah. Man, it's been great ripping with you here. Here we go, guys. That was another edition of the Blueprint. If you enjoyed, if you got information that you otherwise wouldn't have gotten from the show today, if you liked what you saw, please like, subscribe, follow, do all those things. Share this with your friends. That really helps us. I want to keep bringing you guests that bring tons of knowledge. Reach out to Jeff if you have a VA loan and you want to talk to him about pre-approval. And thanks again for sharing the time with us today. We'll see you next time.